Hello, how's everybody doing? Okay, it's another week. Let us try to do some sort of recaps on various pairs that we actually traded the previous past 2 weeks, because I remember last week was an Easter, so I didn't record any of the videos. So let us get into it. Okay, so we are having different criterias. Let's start with EURUSD first. And on EURUSD, I remember we took an entry based on the second agglomeration. Because if you observe clearly on the prices, we can say it's in some sort of limbo. Actually, the price doesn't have a clear trend. Because if you observe on the monthly time frame, we're just having some sort of consolidation and also transition, as you can see. But we know now that the dominant dominant area of liquidity is supposed to be this one, because actually we closed above this particular area buy, but we also didn't have any areas of liquidity. If you observe clearly when I mark this on a straight line, we didn't have any clear liquidity because this was just a transition. So we couldn't term this as our area of liquidity. But coming out to the weekly time frame, if you observe clearly, we didn't have any of the shifts. This previous structure right here continued to be the dominant. This one now, but we didn't have any clear shifts. So we just had to trade each and every area of liquidity, but not for long term, just for short term. So considering this area of liquidity right here from the weekly, we wait for the price to come and liquidate that area inside the 4 hours. As you can see here, the market on came. We took some sort of entries on the outside formation. I remember this was the shift. This was the outside formation. Took some sort of entries from here to here, also from here to there. But clearly, after the market entered to this area, in terms of liquidity consumption, would have taken your entries based on this liquidity engineering. A lot of people know, but trying to look at these concepts on just a very clear way. And the market performed a shift on this point. Right here, also the market left these formations, which was also liquidated one. The market came to trigger some sort of entries, maybe on this previous or and consumed inside formation. The market went down, as you can see, almost 40. But also the market performed a shift and also left us some sort of types on this area where we took the entry. If you can recall, somewhere here, the market went down, the same as to GBP/USD. But now after the market performed a continuation of shift, which was located on this area here, and also we had this inside formation. This is where we took our first entry from that previous week. This was the entry that was taken. And let me try to cut somewhere here, maybe. Coming to the 30, we had this liquidity. The entry was taken based on the fourth agglomeration, but I'll try to explain it in clear terms so as each and everyone will actually understand. And in terms of liquidity inducement, we'll mark our entries in terms of this liquidity engineering right here. And that's where the market later on came. And the market came and the market performed an entry on that specific area. The market came, taps into the entry point. And the market went it was almost 120 something pips, if I'm not mistaken. So the market went, as you can see, yeah, actually 150 something before it performs another shift. So this was almost 138. So this was just the performance. And as you can see here, the market, after the market tried to went up like this on the previous price action right here, we had these types of formations, as you can see here. So the market, I think the market later on came to, because these were the formations that we actually said that they're actually not consumed by. They were actually not consumed, so the market later on came to try and grab these formations right here. So that's all about the EURUSD. Also, let us talk about the NZDCHF. And also on the NZDCHF, it was on weekly time frame. If you observe clearly, let me try to look where the actual entry was taken. The entry was taken on this liquidity, on this shift right here. This shift was this particular area here was the inside formation, which we had a shift on this point. The entry was taken on that criteria. But speaking of the bigger picture, if you observe clearly, we didn't have any clear liquidity, any clear trend. As you can see, the market was coming down. The market came, performed a shift. The market also left this inside formation. it came to liquidate, as you can see, but also the market closed below that formation, as you can see also. But clearly now we are having a transition, which is something like this. That means we don't have any of the formations, and that takes us to the what we call as the reclaim point. The market has to come to actually close above this area. The market has to come and hit the reclaim point. That means we're actually having a bullish idea on this specific pair. That's why we had to find some sort of continuation of shifts that the market actually performed, so as we can take the price upward to the reclaim point. As you can see how the market was actually behaving. So after I found a shift on the 4 hours, which was this one, and also I found this inside formation. So I came to the 30 minutes time frame, and I observed that I was actually having some sort of liquidity engineering, which was this one. And my risk was almost how many pips? Almost 1.2. But it's safe for you to put your entry on this area because, you know, in terms of pips, if you don't have a good broker, if you don't have a zero spread broker, it's actually going to cost you in terms of spread. But it's better for you to mark that first entry if you don't have any good broker, because as you can see on that first entry, the risk was almost appetite, almost 6. But if you are having a zero spread broker, you can actually use that particular area. So the entry was taken on this particular point and the market started to go up. The risk was almost 1.5, but even putting it to 2 pips maybe, it's actually safe. So that is how the NZDCHF trade was taken. I don't prefer trading much these NZDCHF pairs because usually the CHF pairs, they don't have enough volatility. You can actually wait for the price to move a lot, but it's going to move with few number of pips. As you can see, the market is trying to do some sort of regulation process, but clearly the market went up and almost how many pips so far? Almost 104. So that was how the NZDCHF entry was taken. So now let us try to also talk about the gold entries. Actually, gold was performing a hell number of entries, as you can see. And I remember from the previous recaps, we actually discussed how the market came and reclaimed on this particular area. And also we actually waited for the shift for the market to come down to this area. The market performed a shift, if you remember clearly. And also this was the shift. And also we took the entry in terms of 30 minutes time frame. And also we took the entries in terms of the 4 hours, which was actually located on this area. But later on, the market came to the deviator that we actually also discussed. The market performed an entry on the deviator. So the second agglomeration entry was also taken. And also the market came and performed a shift on this area, but didn't left any of the inside formation. But clearly the market later on went again and left an outside formation, which was supposed to be this. But we didn't have any clear price action on this area. So maybe if we are to use this as our shift point and mark maybe this as our inside formation, maybe. But also the market came and performed a pure bullish on that specific area. And we actually know that the reason the market performs this pure bullish is because of liquidity consumptions. But clearly after the market performed that pure bullish, the market later on came again and performed a shift on this point. And also we had this inside formation. This is where I first took my entry. This was the first area where I took my entry. And also coming out to the 30 minutes time frame, here we had some sort of liquidity flips. The entry was taken based on the fourth agglomeration, but on a clear basis. So as each and everyone should actually understand, we are having a liquidity flip right here. And also we are having this furthermost deviation, as you can see. So you were actually safe by marking your entries on this particular point. As you can see, the risk is only 7 pips. So you would have taken that entry as usual. And the market is starting now to go up. Also, the market started to go up, the market went, and the second entry was taken in terms of the balance that I actually spoke about back in the days. And to observe a best imbalance, it's better for you to observe an area where the price behaved actually unfavorably. And speaking of the areas where price behaved unfavorably, we were having this particular balance right here. As you can see, we didn't have any clear weak points on this side, so it was better for us to consider this one. And speaking of imbalances, we don't usually follow the time frame coordination, so I'm just going to observe this area to the lower time frames without considering the liquidity. I mean, the time frame coordination. You just have to go and observe if we're having any of the particular areas of liquidity. So coming out to the 1 hour, we don't have actually any area of liquidity. Coming to the 30, on 30 minutes time frame, we're having this one, this clear area of liquidity right here. We would have actually had this one. So I would actually even mark it also. It's not too bad. Coming to the 15, still we are having this as a dominant one. Coming now to the 5, we had this area of liquidity right here. As you can see, this was actually some sort of liquidity consumption areas. Coming to the 3 minutes time frame, I was still having this. And also on the issue of liquidity consumption, if you observe clearly on these areas, we are having minor liquidity areas where we are having this particular area of liquidity, but the market came, as you can see, and tried to consume it. So I remember marking my entry on this point here, from here to here, and also I marked my entry from this area to this area, but the market came and stopped me out. Later on, the market came and stopped me out. As you can see, we had some sort of this particular piece, almost 133, but the market came and stopped me out. That's not the case. As long as I was having other areas of liquidity, I mean, other areas where price actually performed or shifted unfavorably, and I was actually took the entry again on this particular point. This particular point, also the entry was actually taken, which actually it came in and holded a lot. Till now, the market is continuing to making some sort of new higher highs. So coming to the H1, you also didn't have any clear area of liquidity. Coming to the 30 again, you didn't have any clear area of liquidity. So the more you don't find any areas of liquidity, the more you go into the lower time frames, the more the better. So coming to the 15, also we don't have any clear area of liquidity. Coming to the 5 minutes time frame, we have nothing. As you can see, we have nothing. Coming to the 3 minutes time frame again, we have nothing. So now you're going down to the 1 minute time frame to observe what's actually happening down to this area. And if you observe clearly, from this particular point of view, we had this area of liquidity, but the market came and tried to consume it. It consumed the whole of it. And also we were left with this formation right here. But clearly on this particular formation, we had some sort of liquidity consumption also, but it was minor. If you observe clearly here. So I came and marked my entry right below that previous area. I try to illustrate it clearly. Or maybe let me try to use the horizontal ray. So the entry was actually marked from this particular point to this area where the liquidity is actually enough. I won't go deeper on the issue of liquidity consumption concepts, but that was the entry. Later on, the market came. Later on, the market came. Let me try to speed up this information so as we can actually save more time for more examples. So the market came and activated the entry, as you can see, and the market now started to go up in that particular area. So that was the imbalance entry that was actually taken. Also, the market went up, and also it left us with another formation, which was this one from the 4 hours time frame. This was the formation, I remember. So coming to refine it maybe on the 30 minutes time frame. The 30 minutes time frame, we had this clear liquidity inducement, I can say. Coming to the 5, what do we have? On the 5, also add that particular area. But the market didn't come to this particular point, as you can see. So we had to wait for another area of liquidity, which now the market later on came. The entry that we took on Friday, the market later on came, and this was my area. As you can see, these areas are actually resembling in some sort of ways. So coming out to the 30, for more refinements, in terms of liquidity consumption, you would have come to take your entry on the liquidity engineerings available on these lower time frames. Coming to the 5 again, coming to the 5, here now is where the liquidity consumption is actually observed clearly. And this was the liquidity engineering, also the liquidity inducement, but going more further, maybe to the 1, as you can see here, with this liquidity inducement actually performed an effect on even on these previous reactions. Coming now to the maybe 3, we have anything on this area? Yes, we're having this now liquidity engineering, but it's not a must for you to go to refine more further. Even by marking that particular area from the 5, you're actually safe. But you know the drill, actually, as you can see on these areas, you know the drill, what to do. So from here to here, the risk was almost 26 pips, but I usually use 25. I mean, I usually use 15 pips as my risk. So that's how this entry, the gold entry, was taken, and the market came, tap into the entry. As you can see, in terms of 15 pips, you are actually safe, because I know if the market stops me out by 15 pips, then I'm actually completely wrong at that specific area. As you can see, even the market even didn't go further, even 5 pips, as you can see. So by marking 15 pips, here we go. Market now is continuing to go up. Until now, gold is continuing to rally, as you can see, and almost 623 pips till now. So let us talk about the US30. And on the US30, I remember we took an entry also based on the balance, which was located somewhere. Okay, it was located somewhere here. This previous good momentum activity, as you can see. So coming now to the 30 minutes time frame to observe clearly what was actually inside this particular imbalance. I mean, from the 1 hour, because we don't follow the time frame coordination, we had nothing on the 1 hour. Coming to the 30 also, we had nothing. Coming to the 15, actually there was nothing. Also coming to the 5 minutes time frame, on the 5 we had some sort of these particular zones. We had this zone consumed by the liquidity consumption areas. Also, we would have actually have to mark this one. I marked my first entries on this area, but also I came to mark my second entry on this particular point, because these markets are very, very uncertain. No one knows the next move, so you just trade in terms of probabilistic ways. So I put my entries on that 2 specific areas, where my first entry, we had almost 5.52 pips as a stop loss, and also on the second entry, we are having almost 13.63 pips as my stop loss. So the market came and stopped me out for the first entry, but it triggered the second entry and the market started to go up. So that was how the imbalance entry was actually taken from that particular point of view. But also I needed to take another entry. It was actually the shift, the entry that we actually went to refine it more to the 1 minute time frame. We had a shift on this particular area. We had inside formation, but also we had this outside formation. And considering the outside formation, there's some sort of price action, and I need to explain right here. So coming to the 30 for refinements, on 30, we had this clear liquidity engineering. Coming to the 5, also we had this clear liquidity engineering, but for the issue of liquidity consumption concepts, it actually was must for me to go to the lower time frames, even to the 1 minute time frame, to actually observe and oversee how this liquidity engineering from the lower time frames has to do for me to take my moves. So clearly, the liquidity engineering from the lower time frames was actually this one also, sharing also with the 5 because of what we call as the liquidity inducement. So there was your entry, and the market offered almost how many pips as a risk? Actually, it was 0.8, but you just have to even mark it even to 1 pip or maybe 2, not too bad. Yeah. So the entry later on came. So you have to be very, very careful when situations like this happens. The market came, but before coming to After triggering my entry, as you can see, after the market triggered the entry, as you can see, let me try to cut this first. There's something I need to explain here. After the market triggered the entry, you have to observe the recent price action. The market triggered my bullish entries, but remember the market already performed a shift on the 4 hours and also left me with another outside formation. So in terms of recent price action, the market has to obey what it has to obey at the exact moment. So this entry didn't actually hold. That's why I took another sell based on the liquidity flips available on this particular area of liquidity, where the liquidity flip was actually this one. It was a confirmed liquidity flip. The confirmed liquidity flips are those flips that when, for the time where they were the liquidity engineering, they actually performed some sort of reactions. So that was the liquidity flip entry that was taken, and the market now later on came after triggering the first entry. Market came and tapped to that exact point, and the market started to go down. As the rules of the liquidity flip usually mark that particular candle that took out the overthrow as our area we are going to put our new furthermost deviation. So that was the stop loss area, and the entry was triggered, and the risk was almost 1.4 pips, approximately 2 pips. And the market now is continuing to go down until today. So it's better for you to look clearly on actually what you're having at the moment before actually deciding to hold that trade or no. Some people may actually enter a trade where they may have some sort of profits, but don't let that profit get you up. It's just a matter of observing on what price action the market is actually offering at the moment. If you don't have any of the shifts, just know how to manage your trade. So the market actually triggered the entry through a risk of almost 1.4, but the market went almost 87 pips. That means almost 1:62. So that was all about the US30. But also, we took an imbalanced entry, I remember, on the EURJPY. And also on the EURJPY, on the bigger picture, the imbalance was taken from this area. Just try to look at it on the bigger picture. Because on the bigger picture, this was the imbalance, the first and third candle. On the bigger picture from the monthly, from the weekly, actually we had, if you remember clearly, the last 2 to 3 weeks took an entry based on the second agglomeration, which actually discussed here also on these criteria. But also, we were having, as long as we had this closure, we are having this now as our dominant weekly area of liquidity. That means we had to have a shift from the 4 hours time frame for us to come down to this particular area of liquidity. So coming to the 4 hours, we had a shift on this area, but after the market performed a shift on this area, we had also another formations, as you can see there. But also we had an imbalance. The market reacted unfavorable on that specific area. So it's better for us to take our chances. So as you can see how this is gonna go. So coming now to the 1 hour to observe imbalance, actually the market didn't offer any of the zones. Coming now to the 30, we also didn't have any criteria for us to take the entry. Coming to the 15 again, as you can see here, we had a zone, but the zone was actually consumed. Coming to the 5 minutes time frame, as you can see here, now the liquidity consumption process is observed clearly. So we had to mark the cleanest area where I was supposed to be this one. But I remember when I observed my MetaTrader, when I went to the 1 minute time frame, I observed some sort of banker block. But if I come here to observe clearly, I couldn't find it on the savers from the Oanda, but clearly I had a banker block right here on this particular point. So I had to mark my entry on that specific area. And the risk was almost 4 pips, but it's better for even to extend it maybe to even to 5 pips is not too bad, or 7. Outside this specific imbalance area. Yeah. So that's how the entry was taken on the EURJPY. So later on the market came and triggered the entry. Yeah, that was how the entry was triggered, and the market started to go down. As I told you before, on the issue of managing your trades, you don't have to, or I remember I actually explained this on the previous video, you don't have to put your break-evens earlier just because the market went down like this. No, it doesn't work that way. We have to have a closure on the structures that actually the market offered before coming to after triggering your entry. So it's not a matter of just entering and just leave the market to do its thing. No, it's just a matter of looking and observing what you're actually having, what actually the market offers. So as you can see here, the market triggered the entry and the risk was almost 6.9 pips, 7, not too bad. And this was just a criteria for the market to actually come to the weekly area of liquidity, which is supposed to be this one. Yeah, but also I remember we took an entry in terms of the liquidity flips. It was from the GBP, but I know for certain that the same thing might actually have happened also to the EURJPY. We took some sort of liquidity flips on this specific criteria on the GBP-JPY pair, which we'll come to discuss it later on this video. So the market went down. Market went down, as you can see. I can see the market didn't reach on the liquidity flip from this EURJPY pair, but so far almost the market entered to their zone, so almost 178 pips in handy. And considering the first time frame recently now, the market performed a shift on this area, and we're having this formation. So we may actually even trade this based on the second agglomeration, this formation. Yeah, so that's how the EURJPY pair went. Also, let us try to discuss the silver. And in the issue of the silver, the first entry was taken based on the sixth agglomeration, what you call as the liquidity conferences, with the high time frame conferences, liquidity flow with high time frame conferences. And the students remember on how the entry was taken on this particular area. But let us try to discuss what was actually happening. Recently, I took an entry on because I remember it was on Friday, the day that I took the gold entry. Also, I took the silver. It was located on this particular area. But on the bigger picture, let's try to observe what actually silver is trying to say. On the monthly time frame, we're having a shift on this area, and also we have this formation. If you remember clearly, we took an entry here on this particular area. It was not actually based on the HPSI probability setups, but also we didn't have any clear shifts on this area. And as long as we're having a shift, the main target is going to be on the previous input, which is going to be on this particular area right here. So if you actually take your trades on the whatever the area that you're actually going to take, is the best area for you, you can actually hold your prices until the market reaches to approach that specific area. But considering also on the weekly cycle, clearly we are having an area of liquidity right here. So we'll just wait for the 4-hour shift to happen. If the first shift will actually happen, we are going to close our buying orders, and we're actually going to behave on how the price action is going to behave at the moment. But now, considering the 4 hours time frame, this was supposed to be my shift point, but that doesn't mean that this is not an area of liquidity. So it's also an area of liquidity. So we took an entry based on the fourth agglomeration, but I'm going to try to explain it on normal criteria. The liquidity, the area where the entry was taken was located on the 5 minutes liquidity flip, which was also a round retest liquidity flip, but also an SCF liquidity flip. So as you can see here now, we're having the round retest one. And considering the entry, the rules of this liquidity flips, as you can see here, we don't have any wick, so it's better for us to mark our FMDs on this particular area. So from here to here, we had almost 7.7 pips to various brokers, or 77 pips to various brokers. So it depends on how your broker calculates his or her pip value. And the market later on, as you can see, came, and this was the entry triggered. But even if you missed this entry, you would have taken the entry in terms of confirmations. As you can see, we're having this particular liquidity engineering. So you would have taken your entry maybe here, or maybe even to the lower time frame, maybe to the 1 minute time frame, maybe with a 3. if the market tried to offer any of the liquidity engineerings. We had this liquidity engineering right here, so we would have taken your entry clearly to that particular area. So yeah, so that's how this market structure actually operates. And here, as you can see, this was the risk, and the market started to go up. The market's actually continuing to go up till now, as you can see. And so far, we're talking about almost 120 pips. So we actually wait for the market to maybe reach to this particular area, but we have to also observe how the price action is going to change on that specific area. So even if you do your analysis maybe on the weekend, and maybe the market started moving, but you reach maybe to the Wednesday, your entry is not triggered yet, try to observe the recent price action to see if the market is going to take your entries or no. Because if the price action actually changes recently, it's just a matter. The market will come to try to just to react on that specific area that you actually marked, but we don't have any guarantee that the market is going to hold. So let us talk about the EURGBP pair. This is the most lowest volatile pair I've ever seen. Actually, if you remember last year, I actually also talked about this area of liquidity, the monthly shift that the market actually performed, and also left us with an inside formation which was actually consumed. And also, we had this outside formation which is still dominant till today. As you can see, the market hasn't performed any reclaim point yet. So I remember speaking about the second agglomeration that we actually took on this specific area. And also I remember speaking about the deviators that we actually traded on this particular area based on the second agglomeration. But also, after the market triggered the entry, I don't know if a lot of people are actually backtesting a lot. If you backtest a lot this EURGBP pair, if you go to backtest a lot, you're going to find this particular setup. Some sort of, yeah. These actually, we are having a lot of reactions based on this particular area of liquidity that's formed on this subsequent particular point right there. But also, after the market took the entry, came to react to that specific area, but observing clearly the market started to go up later on after it came in to reclaim this area, performed a shift, the market that did what it did. Also, we took the entries, if you remember clearly, on this particular area where the market went, but it didn't go more further. Also, the market performed a shift and also took the selling entry, if you remember, but still the market came inside the monthly area of liquidity for the second time. That means we're going to test again the price on based on the second agglomeration. So if you observe clearly the structure that I was actually talking about, which is this one, you can see it clearly on this area. Also, you can see it clearly on recently this particular area right here. So after observing what the market did here and also did here, you're going to know what the market's actually going to do when it reaches to this particular point. So we actually expect some sort of reactions. But clearly, the market performed a bullish shift inside a bullish area of liquidity, which is the monthly. That means you're going to trade based on the second agglomeration. And this was my inside formation, and the entry was taken. The entry was taken on this inside formation, coming to the 1 hour time frame to try to refine this particular area of liquidity. We had this as a liquidity engineering. I mean, this liquidity inducement, if you observe it clearly. But going out further to the 15, because this pair is it doesn't have a lot of huge volatilities, we took the entry based on this liquidity engineering. Actually, in terms of the rules of the system, of this strategy, we had to take the entry based on this particular area. But once I marked this area once, but I came to observe clearly on the issue of the risk, as you can see here, from this point to this, it's almost 0.3 pips. Something which the brokers won't allow you to do, even if you are having actually a zero drawdown, I mean the zero spread account. But I came later on and tried to mark this now as my area of my liquidity engineering area or my entry criteria area, but I came try to extend my stop loss to almost 2 pips, which was somewhere here. Yeah. So later on the market, as you can see, the market came and triggered the entry. The market triggered the entry. The risk was only approximately 2 pips. As you can see, this pair doesn't have enough volatility. So if you find areas like this, you're just going to put enough losses if you're having a very, very good broker. So actually, this area of liquidity is supposed to take us outside this monthly area of liquidity, and we're actually supposed to come and create a new high to this area, or even to reach to this specific point. But we are having this particular pattern. I don't know what's inside this pattern. I didn't backtest enough, but these patterns happen a lot on this specific EURGBP pair. So it's just a matter of backtesting a lot to observe what we're actually having. But if I observe clearly after the market approach to this area, we just had a transition, and also we had a deviator. Also, we actually had some sort of shift from the 1 hour time frame, which was this one. The market tried to create the formation, didn't offer enough pips, but the market also went up again. And so far, we are having a shift on the 1 hour time frame on this specific area. So it's just a matter of observing, will the market surpass this, this area of liquidity from the daily, or will the market come and try to close above that particular area, or will the market come to reach to this reclaim point or this reclaim point? Nobody knows. It's just a matter of waiting, because we actually trade what we see. We don't trade what we believe. So that's why you will never find that I draw something like this on my chart. Maybe the market will come here, will do this, will do that, will do this. No, that's fucking bullshit. So it's just a matter of waiting to see what the market offers at the moment. Yeah, so that was all about the EURGBP. Also, let us try to talk about the AUDUSD entry. And speaking of the bigger picture on the monthly time frame, we are having this area of liquidity from the monthly. And if you observe clearly here, the market, if you remember clearly, I actually explained the second agglomeration how this entry was taken on the previous videos. But also, we also explained how the second agglomeration entry was taken also coming down to this area. That means we are actually still, because this area actually continues to hold, so we are still in this monthly area of liquidity, as you can see. And if you remember clearly, the market came to activate this entry we went almost 400 to 500 pips, as you can see here. And also, the market performed a shift, and also we had this outside formation. Also, the market took the entry and the market went down. But also, if you observe clearly, we are having a bearish idea on the monthly time frame. And that means for us to trade perfectly, we have to have a monthly bearish idea, and also the daily has to be of a bearish idea. But if you observe clearly on this recent price action, the market didn't follow that. The market performed a shift here, did a transition, but it came to do a continuation shift on this particular area right here. This point, sorry. This was the shift point. If you observe clearly, we're having this inside formation. That means on the daily time frame, we have violated that specific bearish idea given by the monthly time frame. So you're going to trade, but you're going to be very precautious, because it's better for the market. It's better for us to trade when these time frames actually align. And if we're going to trade this area, that means we will have to be very observative on when the market reaches to or approaches to this particular area of liquidity, because this is the formation that came to confirm the outside formation. Okay, yeah. So now, speaking of this inside area of liquidity from the daily, this inside formation, the market performed a shift, as you can see, and also left us with this formation. That's why I came and took the entry on this particular area. Coming out to the 1 hour time frame, we had a beautiful liquidity engineering. But also, the main reason we took this liquidity engineering is because of the liquidity consumption. Clearly, when we come to look at this specific area, as you can see here, from here to here, we had almost a risk of 4.7 pips, approximately 5. And later on, as you can see, the market came and triggered the entry. Market came and triggered the entry. Let me try to speed up this simulation. clearly maybe on the 1 hour, it's not too bad to observe how the price came. Yeah. But also, as you can see, before the market comes down to this daily area of liquidity, the market performed the H1 shift and also left this inside formation. But also it came to perform a pure bearish, but also it performed another continuational shift and also left you with another formation. So you would have taken your selling entries, taking the market down to the daily area of liquidity before buying again. So that's how these things actually work. So the market later on came and triggered the entry. Yeah, the now market started to go officially up. And the market usually moves with huge momentum activities on those areas where liquidity has been done, liquidity consumption has been done, liquidation process has already been done. So as you can see, the market moves with a lot of huge momentum activities. So we're actually anticipating for the price to go up to reach maybe to that specific area where we confirmed our outside formation by closing. I remember the issue of structure confirmations actually explained back in the day. So if you are not familiar with it, you just have to go to those previous videos and maybe try to observe. Yeah, so that was how this particular trade was actually taken, and the market went almost 137 pips. So it's just a matter of trying to observe what the market will actually do, because we're actually having a transition on the daily, and also on the 4 hours we're having a formation. So for those who understand how the FTA works, maybe it will be the opportunity to go and do some analysis and try to observe these concepts. But also the AUDCHF entry, also we took the entry, if you observe on the bigger picture, clearly after the market performed this price action, we didn't have any shift on this actually weekly, but also this was supposed to be my shift point. But also it doesn't mean that this is not an area of liquidity. So this is also a dominant area of liquidity, because so far there's no any shift that's actually happened. We just had some sort of transitions, as you can see here and all that, but we didn't have a clear shift from the bearish, because this is supposed to be the dominant structure. So that means coming to this area of liquidity, we had to actually trade the types of liquidity or try to trade the continuation of shifts that were actually happening at that specific area. And speaking of the continuation of shifts, the market came and performed a shift on this particular area here. And also we had some inside formation, which I know my students are very familiar with it. And coming to the 30 minutes time frame for more refinements, this entry was taken based on the second agglomeration, but let us try to break it maybe on normal circumstances where each and everyone is going to actually observe what to do if he or she will come to encounter such criteria. So for the issue of market structure, let me try to explain it in a simplest way. If you are having something like this, it's just the same thing as having something like this, because on this particular area we have nothing. So on this particular area, if you don't know maybe the fourth agglomeration, you may actually even trade the liquidity flips that were actually available on this particular area. This was supposed to be the overthrow. Yeah, and later on the market came and this was supposed to be your risk, the particular area you're going to put your stop losses. So the market later on came and triggered the entry, the zero drawdown entry, as you can see. Yeah, so this was how this HF entry was taken. The risk was only 1 pip, but even extended to 2 pips, not too bad. It doesn't cause any more pain. Yeah, so the market actually went up. It's almost 100 and something pips, if I'm not mistaken. Yeah, 100 and something pips. Almost 129 to 130. And as you can see here on this particular shift point from the 4 hours, the market continued to hold this trade because it didn't actually perform a candle closure above that area. So for those who know the fifth agglomeration, they know what to do on that particular point. But also the last pair that was actually taken was the NZDCAD. And also on the NZDCAD, if you observe clearly on the bigger picture, we are having a shift, very clean shift on this particular area. And also we are having this formation right here, an inside formation. We're having an inside formation, which is this one. So coming now to the 4 hours, for us to come to liquidate this particular area, we just had to come to the 4 hours to observe shift. And coming to the 4 hours, as I've told you before, you just have to observe the shifts where the market performs below the swing points. And also, as you can see on this particular trend, we didn't have any clear shift. So the market later on came and performed a clear shift at this particular point. And on this one, we had an outside formation, which was this one. So this was very, very easiest entry. NZDCAD is very, very easiest pair to trade. Very, very easiest pair to trade, especially on the second agglomeration, on the fourth and whatever. It's very easy. But also, coming to the fact we didn't have any clear liquidity engineering, but also this entry also was taken based on the fourth agglomeration. But speaking of it in the criteria where each and everyone is going to understand it clearly, you would have used this particular liquidity engineering area here, and the entry would have been taken as usual because the risk from here to here is very minor, almost 3 pips. Even if you would have used this one in the middle, so far is okay, as long as you can see almost 9 pips. So just a matter of measuring your risk on how to take these entries. Yeah, so the entry was taken based on that criteria, and the market started to go up with almost 4 pips to risk. Almost 4 pips to risk. And the market started to go up. And so far the market went almost 104 pips. So it's just a matter of observing what the market is going to do next. That's how you're going to react to how the market is going to behave. So that's all, guys. Maybe I think we'll see you in the next video or whatever. Stock signing out.